Hello guys, welcome back to my channel. We are back with another video. Today we will have a detailed analysis of one of the company. So today we will have a detailed look on one of the FMCG sector. So at first we will decide why should we are investing in FMCG sector. So FMCG companies are actually manufactured products that are consumed by human beings on a daily basis. With increasing populations and increasing rates of urbanization in India, we can say that this sector is not going anywhere. So now the question will be why we are investing in this particular sector. So in 2011, the total overall market value in India of FMCG company was around 2 lakh crores, whereas it has increases in 2017 by almost 4 lakh crores with a CAGR of around 15% every single year. So even the government is also helping the FMCG companies. So while keeping that in mind, let's start the company analysis. So the company which we have chosen for today's video is LT Foods. So the company is actually incorporated in 1980s, and the company was primarily engaged in the business of milling, processing and marketing of branded and non-branded basmati rices and manufacture of rices products in the domestic and overseas market. So this is the overall view about this company. So in short, the company actually just manufactures and sells basmati rice chawals under various brands names, which we will see in another sheet. So let's move on to the next sheet, which is about the brand of this company. So the companies has some of the famous brands which include Dawat, Royal, Heritage and many more are there. You can just pause the video and go through all the highlights company's name. So let's now move on the next sheet, which is the revenue split about this company. So from the basmati and other specialty rice, the company gets around 79% of its revenue. From organic foods and ingredient, company gets around 13%. From health and convenience, around 2%, and from other it is around 6%. And recently the company has 5 states of the art manufacturing facilities in India, 3 modern production facilities in the United States and 1 in Europe. So this was the overall revenue distributions and the manufacturing of this particular company. Now let's have a look on the graph of this company. So the current price is around 113 rupees, whereas all-time high was around 135 rupees and the low was 66 rupees. In the last 1 year, the company has given more than 36% CAGR to its shareholders in the last 1 year. Now let's have a look on the fundamental key highlights of this company. So the market cap is around 4,000 crores. The P is around almost 10. The ROC is around 17.7%. The book value is 80 rupees and the ROE, which is return on equity, is around 17%. So this is the overall quick fundamental key highlights of this company. Now let's have a look on the peer comparisons with its competitor. So the company ranks almost around 6th position. The first one is taken by KRBL, which is also one of the great company in FMCG sector. And you can just pause the video and go through all the fundamental key highlights with its competitors. Now let's have a look on the profit and loss account of this company. So over here I have personally highlighted every single thing so that you can understand well. So the operating profit of the company on March 2012 was 164 crores, which has gone up increases in March 2023. It was around 701 crores of operating profit. The OPM, which is operating profit margin of the company, was around 12% in March 2012, which has decreases to almost 10% in March 2023. But if you see the profit before tax, it was around nil in March 2012, but it was around 563 crores in March 2023. The net profit of the company has slightly increases over a while from -1 to almost 423 crores as per March 2023. Even the EPS of the company has increases to up to 11.6 rupees as per March 2023. So this is the overall about the profit and loss account of this company. So now let's have a look on the balance sheet of this company. So in balance sheet, total liability of the company on March 2012 was 1,600 crores, which has gone up increases to almost 5,300 crores as per March 2023. The reserve of the company has slightly bit increases and the borrowings remains the same, whereas the other liability has increases from 123 crores to almost 1,350 crores approximately as per March 2023. Whereas in asset side it remains the same, but the company's fixed assets has almost increases, which includes machinery, land, buildings and many more. So it was around 330 crores as per March 2012, which has increases to almost 1000 crores almost in March 2023. The company has also done some investment of around 127 crores as per March 2023, and the other assets also has increases from 1300 crores to approximately 4200 crores of other assets, which includes cash, inventory and many more. So this is the overall balance sheet of the company. Now let's have a look on the cash flow of the company. So in cash flow, we will just have a look on the net cash flow, which come out after adding operating activities from investing activities and financial activities. So in March 2012 it was around 27 positive crores, whereas in March 2023 it was around nil. But you can see over here there are almost an investment of 395 crores in investment activities, which may include in a form of purchase of machinery, land or something. So overall the company has made a good profit and the net cash flow of the company is still positive. Now let's have a look on the important ratios about this company. So The debtors day has improved from 69 days to almost 35 days. So the decreases of the debtors day means the improvement of the company. Eventually the inventory day has also decreases from 306 days to almost 245 days. The days payable has also, but it increases to almost 27 days to almost 87 days as per March 2023, whereas the cost cash conversion cycle was around 350 crores in March 2012, which has decreases to almost 193 crores in almost around March 2023, whereas the ROC, which is return on capital employed, is around 10% in March 2012, which has gone up, increases to 18% as per March 2023. So this was the overall important ratios of this company. Now let's have a look on the graph performance of this company. So this is the overall graph performance, and in sales growth you can see the 1 year, 3 year and 5 years growth, eventually with the profit growth, ROE and ROCE, including the debt to equity ratios is also over here, price to cash flow is also here, interest coverage ratio is also here, and CFO of 5 years average is also over here. You can just pause the video and go through every detail of it. So now let's have a look on the inside trades of this company. So these are some of the recent trades which has been done by the company's promoters, shareholders or employees or any other persons. So you can go through it, but overall if you see, you can see a lot of person has actually bought the company's shares around 2020 and 2019, I guess. So you can just go through it. So now let's have a look on the pros and cons account of this company. So in pros, the company has shown a good profit growth ratios of 27.24% in the last 3 years. The company also has a good cash flow management of around 2.07, and the company has a high promoter holdings of around 51%. Whereas in cons, the company has shown a poor revenue growth of 9% in the last 3 years, and the company has a contingent liability of 335 crores approximately in 2023. So this is the overall pros and cons account of the company. So now let's have a look on the holdings of the promoters. So the promoters hold 51% shares, the public hold 40.95%, the FII, which is foreign institutional investor, hold 5.04%, the DII holds 3% of the company, and the others own 0%. So this is the overall holdings of this company. So now let's have a look on the summary. So overall, if you ask me personally, this company is actually great, and in the last 1 month the company has given more than 36% returns to its shareholders, and this company is actually in the FMCG company, and we can bet on it because we all know that the population of the country is keep on increasing, so the demand will also increase, and overall the individuals expending power will also increase, so they can actually afford the basmati rice. So if you ask me personally, this company is actually great, and even the PE ratio and other ratios are actually very less. So you can just go through this, and this may be a multi-bagger company because it's actually available at very low cost. So thank you so much for spending some time with us. We will back with another topic. Till then, bye and have a nice day. And just to remind you, this is not a bias or recommendation video. This is just for the personal knowledge and do your own analysis before investing. Thank you so much, and bye bye.